switching gears a little bit here. The next question is, what are the biggest advantages and risks to investing in real estate? And that's a great question. And I really just wanted to kind of talk about real estate in general, because it would be kind of way too long to talk about every subclass of real estate. But the first thing and the most important thing for real estate, for me anyway, is cash flow. That's the number one advantage to real estate. Very few, if really any other asset classes, gives you as predictable long-term cash flow as real estate does. This is cash flow that you can use to purchase other assets. You can purchase a car or whatever, but I would purchase other assets at cash flow. And then you got more cash flow to purchase more assets at cash flow. And then you've started this nice little virtuous cycle that most of us are aspiring to, right? So sorry, my voice is giving out a little bit. The next thing that really is, attractive to me from real estate standpoint is the ability to drive appreciation. Now, I mean, real estate, it generally appreciates on its own, but, income producing property really allows you to drive appreciation by increasing the value, the variables that go into the equation to figure out what an income producing property is worth. So a lot of the times, with single family homes and stuff like that, it's a little harder to do. When you get a portfolio of them, you can actually value those based on an income approach. And what that is just the NOI divided by the cap rate. And the NOI is your net operating income, which is revenue minus expenses, and that's your NOI. There's a few other things that you can back out of that, but let's just make it simple. And a cap rate is basically the cash you would receive if you paid for the property with cash. And that cap rate basically is true for a certain MSA generally. And the cap rate doesn't go up or down too much. It's been compressing lately. It's been dropping over the past several years. But for the most part, the NOI, the cap rate, and that gives you what the value is. So if you increase NOI in your apartment complex by $50,000 by doing a rent raise and, I don't know, maybe taking some utilities off of your plate and then billing them back to the residents, which is very common, then, you say you gained $50,000, you divide that by 0.08, which is the cap rate, and you just made $625,000 out of thin air. So that's one of the, and that's what I love about real estate, is you can drive that appreciation. It's very, very unique. And another thing I love about real estate is it's inflation resistant, because, as consumer prices go up, so do rents. And the Harvard Center for Joint Housing Studies just reported a few weeks ago that rents grew at an amazing 11% last year. That's the perfect example of, as consumer prices go up, so do rents. So, real estate's a very good inflation resistant hedge. The next thing a lot of people just kind of overlook is the principal being paid down. You're enjoying the cash flow that you're creating and the value you're driving, the appreciation that you're driving in your property, and your tenants are paying down the note that you have on the property. So your equity is increasing as well. Notwithstanding any of the value that you're adding to the property. And I guess probably my biggest, I love all the advantages of real estate, but one of the biggest advantages of real estate that I've seen is the tax benefits that it gives you. Rental income is taxed. First of all, rental income is taxed differently. It's taxed as passive income than your ordinary income. So it's taxed at a different in a different way than your ordinary income is. And the depreciation that you have from your passive real estate investments can be used to offset that income, to where whatever passive income you're making from your properties can be tax-free. And then if you had a full-time real estate professional designation, then you can offset active income with passive losses. So like we talked about before. And you can also strategically harvest equity from your properties tax-free via refinances. a refinance is you're taking out debt on your property, but that money that comes to you during the refinance is completely tax-free. And then you can do what you want to do with that money. Whether you want to put it in your pocket, I think you know what I'm going to suggest: go out and buy assets of cash flow. But you do what you want, but that's tax-free money for you, and your tenants are paying down the extra principal that you've added to your loan. Another big benefit to me is leverage. You can leverage to increase your returns dramatically. If you look at if you put $100,000 in the stock market, and that means you have $100,000 worth of stock. If you invest $100,000 in real estate, well, I mean, that means you could own $1 million property. Then you control, to a large extent, what it's worth when you sell it. I mean, just think about the example I gave a minute ago. If you increase that NOI by $50,000, then you've added $625,000 in value that can be accessed tax-free through a refi, or you can 1031 it. But regardless, you've added that value, and it can be tax-free. And one of the other things, and I never understand this when people tell me that real estate is so risky, and I think that's just because they don't understand the power of real estate, quite honestly. But real estate is very, very stable. It has a very low volatility, and it's really volatility that ends up killing stock players most of the time, because they sell low and buy high, because but fear basically sets in. But with real estate, it's very, very, very low as far as the volatility goes, and it has the highest risk-adjusted return of any asset class. I don't know if you guys are familiar with Sharpe ratios, but Sharpe ratio is just a risk-adjusted measure that looks over all different asset classes, and it has the lowest risk-adjusted measure of return, which is good. The lower the ratio, the better. So, I mean, this gives you like economic cycle protection that you just can't get anywhere else, especially the stock market, in my mind. AAA life insurance companies both lend and invest in this space, and the foreclosure rate is exceedingly low. So it's definitely a very stable asset class, and it's also evergreen. I mean, you'll hear that word a lot, but evergreen means people always need it. People always need a roof over their head. One of the most surprising trends, to me at least, has been in the past couple decades in the U.S. rental market, has been the demand for baby boomers. They really are foregoing home ownership in the favor of looking for shorter term living arrangements. And they're hitting the rental market. And there's tons and tons of over 55 communities springing up. And a lot of these are build to rent, 55 single family communities. And that's an homage to the baby boomers. They're wanting that. They don't want to cut grass and take care of their 5,000 square foot houses anymore. And the same goes with millennials for different reasons, but they're wanting more rental opportunities as well. So the demand is definitely there. And it's a business too, right? Like, I'm here, I'm able to deduct a lot of what I'm doing while I'm over here. I mean, don't go out and start deducting away anything before you talk to your tax professional, but real estate is a business. There is a P&L, there's a balance sheet, there is, if you're paying yourself, there's payroll. If you have employees, there's bookkeeping. You set it up in an LLC. It is a business. So with that comes the deduction of expenses, and you're able to do that through real estate. So not only do you get the cash flow and the appreciation, the principal pay down, the tax benefits, but you also get to deduct expenses against your real estate as well, against your real estate business. So that's a huge advantage. I guess the last one I can think of, and it's probably the biggest, is 1031 exchanges. 1031, we were talking about, doing the cost seg analysis and those types of things. And, what if you sold? Well, all that depreciation would get recaptured unless you 1031'd it. And you 1031 into a like kind property of equal or greater value. And you just continually cascade up that way into bigger assets, into more assets, into more doors. And the beauty of it is, and they tried to take that away this year, and I don't think they got it pushed. Well, I know they haven't yet, and I think it's kind of died on the floor, but the tax basis on the properties resets upon your death. So it's a great way to transfer wealth down to others, including your kids, your grandkids, and stuff like that, because that tax basis, the tax basis resets to whatever the market is. So the depreciation capture goes away. So you give your kids a brand new shiny asset that's fully depreciable again, that they can do cost segs on and depreciate it and start the cycle all over again. So 1031 is a very, very powerful tool. The risks, your principal is always at risk, right? I mean, you're putting money into a deal and a deal can go bad. However, what's likely to go to zero, what's more likely to go to zero, a stock or a hard asset like a home? Even when we had the horrible crash in 2008, when home values plummeted, guess what didn't get hurt? People that owned rentals. Rents stayed strong. They dropped just a little bit. And when I say a little bit, I mean like nationwide, it was like $913 to $902, something like that. Don't hold me to that. And then the next year they went up. They've been going up every single year since. So the people that owned rentals didn't get crushed. They stayed strong and were still able to cash flow. But my dad, who was retired at the time, was living off paper assets that almost went to zero. And, if he would have had rental real estate that cash flowed during that time, he probably would have been fine. So, yeah. And I guess the other thing would be, especially if you're a limited partner, investing in, syndications and those types of things, is just the loss of liquidity. Depending on how you invest, that's probably the other big detriment that I can think of. Your money could be tied up for several years. But those are the main advantages of investing in real estate in my mind. I just don't see a whole lot of disadvantages when you compare them to the advantages.